Howdy, Jacob here. Today we're looking at Baozun, ticker symbol BZUN. It is in the broadline retail industry, 143 billion market cap, 200 negative 216 million enterprise values. They have way more cash on hand than debt. Again, it's in the People's Republic of China. They provide end-to-end e-commerce solutions to brand partners. They operate through two segments, e-commerce and brand management. I mean, growth for the beginning of the 2010s was absolutely phenomenal. Slowed down a bit more recently. Margins, not very impressive on the operating side, mid to low single digits. Pretty low return on invested capital historically. But, I mean, really, this balance sheet, if this is correct, you have 402 million cash like products, 227 million in debt, no long term debt. So they have enough cash to just write that debt off. They'll be debt free. Um, with cash flow production of really fairly solid, about 30 million. So in relation to that 143 market cap, it's just about less than five times. But really, again, I said this about a day ago on my two videos ago, was that, I mean, there's going to be certain companies you run into where you just don't feel comfortable. It could be the geography, it could be what they do. Maybe you don't invest in smoking companies like Philip Morris or Altria. Maybe it's, death companies like cemeteries and stuff. Maybe it's Chinese companies, geographical regions. Maybe you don't invest in. Maybe you don't invest in Japan. So, I mean, this could be a quick video for some of you just saying you're not interested. And for me, I mean, I'm always skeptical because there are some Chinese companies that are a bit larger that I do feel more comfortable investing in some of the bigger companies there. But for me, when it gets down to a company that's worth $143 million, I'm always going to be skeptical outside the U.S. when it comes to small cap. But I mean, really, I feel like we can start making some assumptions here. But again, everything just please do your own analysis. Make the margin of safety comfortable for you. I think revenue wise, 5% seems fine. Market average, maybe a little bit lower, seems fine. Margins, 3 and 2.5. And then, I mean, they haven't yet. Let's do 2 and 1.5 actually, because they haven't made money in 3 years on the net income side, and their free cash flow has been negative with the 2 million, so or 2%. So you really got to offset that. Share change 1% would be about a million, but yeah, I mean, I don't know. This might be a company that I probably just don't feel comfortable with, even after doing research, because again, it's not just understanding the business, but you also have to know that the numbers are accurate and they're stating what's right. I'm not trying to diss this company. I'm just saying, or honestly, the entire region of all companies in the People's Republic of China. But for me personally, there's just things that I'm comfortable with in it. I'm not saying that. Yeah, I just don't know if I'd be entirely comfortable investing in it. But anyways, even with my assumptions, we're saying it needs to fall 29% before you get the return we're looking for here. I think if these numbers are right, if these projections are right, I mean, you could, yeah, absolutely make a fantastic return here, but it's just going to be you being comfortable with everything. So, hope you enjoy the video and have a great rest of your day. Thank you.